Welcome back, guys, Crypto4Life channel. Today we'd like to talk about timeframes, synchronizing timeframes, and how to build your personal framework when you analyze the tickers. Let's dive in. All right, guys, like you know, I already posted some type of this video, but today I want to show you another framework, how you can combine everything on a chart, in one picture. It's like a puzzle. It's like you need to solve the puzzle. So of course, you can move, and I personally move from monthly time frame to the weekly to the daily. Then I open the daily and mark the zones on intraday zones. I mean the 4-hour time frame, 1-hour time frame, 15-minute time frame, and some entry we can mark, especially the entry position is like 5 or even the 1-minute time frame. Let's start with the big picture first. On the monthly charts, I focus on 3 things: overall structure, significant highs and the lows, and the signs of possible market manipulation, also the fair value gaps. So if we open, for example, the chart of Sol, we don't see any fair value gaps in this block. So I don't want to analyze this price movement because anyway, in the next few months, I don't think so. We're going to drop to this level. That's why I skip this part of the chart and I focus on this range. And on the monthly time frame, there is no gaps, no favorable gaps. Got it. Next one. This top on the monthly time frame, we can identify like manipulation. In other words, it can be like a target for the next upside move when, for example, by timing, by seasonality, we will see the continuation of the trend. Got it. So this is like manipulation happening in the monthly, because after that we saw the 2 months down. If we take a look on a structure, of course, we can see this is a uptrend move with the high lows and the high highs. After that, we move to the weekly time frame. On the weekly time frame, I add the 2 indicators. I usually use and double check the data on all 6 indicators, but I personally, on the weekly time frame, especially if we talk about a spot position, I use the take profit indicator. Like, this indicator show the buy line, fundamental value of the token, take profit line, and the exit line. Now, like you can see on the screen, we touch till penny this line, 244 and 26 cents till penny. Sometimes it's happened. That's why we get reaction. It gives me the signal. So if I'm open a position around the buy line or after correction, here will be not a mistake to fix some profit. If we talk about the spot position also. After that, I turn off take profit indicator. This line on the monthly time frame, like a target, like a manipulation, still relevant and will be relevant until we not break this some significant high. After that, I take a look on the money power indicator and I try to identify, do we now in the money inflow position or money outflow position? So the whales fix the profit or start inflow the money into Sol on this example. And like you can see, we're just in neutral zone. There is no confirmation about the money outflow or the money inflow. The last money inflow for Sol was here in December 2022. And of course, before, they accumulated before. After that, we see that just the distribution. Step by step, they distributed. So it's giving the information. So on the weekly time frame, on a bigger time frame, not on a daily, they will step by step understand something, and they start fix the profit. They can't fix exactly at the top. They're not chase to sell exactly at the top. So they prepare their backs and fix step by step because they can't press sell by market. Oh, market gonna crash down. And the chart will look like something similar to the OM. On a weekly time frame, I try to look again the market structure, but also look for zones of support and resistance, fair value gaps, and identify the significant highs and the lows, and watch for manipulation or so-called the fake outs. Once again, even on the weekly time frame, all gaps on Sol close. Nice one. The structure on the weekly, like we can see, we get an uptrend structure. That's why we'll be not just a bad move if we drop, for example, to 200 on Sol, keep the uptrend structure, healthy correction, and continuation to the top. Of course, is it possible? So we will move from this current prices to the higher point. Yes, of course, it's possible. Everything is possible on the market. So there is no favorable gaps. Done. There is no money outflow or money inflow. Done. Still in uptrend structure. Done. Can we see the healthy correction? Yes, and we will open the chart on the daily, trying to identify the zones on the daily. We can also work with the order blocks, for example. So this is an order block, and this block will be like support level now for Sol. This is another one. Somebody used the order block by week, somebody by body candles. I identified here on this example with the body candles. Also, to not see the mass on the chart, I recommend you all the time go into visibility and remove these order blocks, for example, on our time frames. So when you switch the time frame to hourly, you will not see on the chart these order blocks. And when you return back to the weekly and the daily, for example, it will be visible. Done. So for example, we go to 4 hours time frame, there is no order blocks. Weekly time frame, this visible. After that, based on this framework, we go into the daily time frame. This looks more interesting now. We got support zones. This is also the zone of interest where will be more logical to open long position. Why? Because of the weekly time frame and the monthly time frame direction, the structure looking forward, looking upside move. On the daily time frame, no makes sense to analyze all of this left side of the chart, so let's focus on the current one. On the daily, it's not so important to mark every single daily failure gaps, because like you can see, there will be just a mess on the chart, because here's the gap, here's a tiny one gap, here's a tiny one gap, here's a gap. That's why I'm not identify that gaps on the daily time frame. We can also identify the hypothetical trend line. Of course, like, I'm not a fan of the trend lines, but for intraday, to identify the potential zones for a reversal move after the first test, we can mark the trend line. That's why it will be not a mistake once again to drop and test the theoretical trend line, drop to 200 per sol. For now, if we not hold the line this level and not keep the uptrend structure on a daily, the next step of support will be the order block on a weekly time frame. That's why on a daily time frame, I mark the levels like previous day's low, previous day high, current day's high and current day's low, and other important daily zones. Take note of any manipulation or sweeps of these levels and mark out strong support and resistance. You can do this manually, or I recommend you just use indicator like opens. There's many variations. It's showed you the weekly open, monthly open, yearly open. And of course, in the settings, you can adjust even the daily opens, for example. If we go to the weekly time frame, looks like this one. If we go to 12 time frame, here's a daily open. One more reason when we're looking at that framework, these levels like weekly open, monthly open, yearly open, trend line, hypothetical trend line, looks like a healthy zone for healthy correction. And which one level will be tested first? We can't know, but it's a logical zone to start looking the continuation of the trend. That's why if you want to open long position, you have to be ready to see the potential 20% drop from current prices, because now more reasons for a local healthy daily 12 time frame, 4 hour time frame correction. So you step by step, brick by brick, build a plan, build the logic on a chart. Sometimes I turn on back the take profit indicator on the daily to take a look at the buy line. Here, the buy line now is on 119 around the second order block. It's giving me the confidence. So yes, that zone's valid, that zone important. And if something happened on the market and we will see the flash crash, I will be ready to buy more SOL. If we talk about current ticker at that level, then for example here, it's about the size of position. If we go to 12 time frame, of course, here's a little bit higher, around 130. What is positive news for Sol in this situation. We still didn't test on 12 time frame take profit line. It's 258 and exit line is 291. But of course, the daily time frame is more important than 12 time frame. I turn off the take profit again. You can, of course, you can add any of this indicator to identify the more additional data for your analysis. For example, now we see the signal to sell. It's still not confirmed because we need to see the daily candle close. After the last one, signal to sell, we drop it like 23%. Of course, the signals, it's not an option, so you have to open the short position now immediately. You have to work with the setup. So if you see the setup now, you can open position. So for example, it's potential based on risk ratio, like around 3% stop loss and the 20% profit. So with the second leverage, it's like 6% stop loss and 40% profit. Based on risk ratio, this can be the good position, 1 to 7. On a daily time frame, I'm also see the RSI bearish divergence was here in August. Here's the money outflow. 1, 2, 3 days in a row, some money outflow. What will happen in the next few days, in the next weeks, we can't know. The price can, guys, move even like this one on the next morning. Yes, it's possible. I try to explain you so you have to build the logical plan, the more logical reasons for open position, to not touch the token, to close position, to open short, to open long. The more reasons you know, take a note, the more chances that trade or that zone will be valid and give you the profit, not losses. So I can close the take profit indicator, and now I move on to the lower time frames. We open the 12 time frame chart. What I can see here, definitely I don't like this order flow. So it means every single week, every single candle, and every single week below the candle, it's someone stop losses. It's like a magnet for the market makers to drop. It's like signal is drop it and liquidate us. Grab that liquidity. Here's stop losses. Here's stop losses. Here's stop losses. This guy's in profit. Who open on a 4 time frame? Who open on a daily time frame? That's why it's giving me the one more reason. So the weekly, monthly, yearly open trend line, money outflow. It's a bearish targets for locally, just for the next maybe 3, 5, 6 days. Of course, guys, on the chart, we can't analyze and can't predict the upcoming news, you know, because we can't know what can happen next in the next second in the world. But at least we build a plan. So based on trade on indicator, we don't see the signal to sell on a 12 time frame, and I don't like the order flow, but I see the money outflow step by step, the fixation. So we move to the 4-hour time frame. On 4-hour time frame, we see the daily open, signal to sell, but it's not an option because we can see something like this one. I see once again the money outflow, so the whales fix the profit, I turn off the trade on, and I start build the intraday zones. Inside a day, of course, we can, for tomorrow, for example, we can identify the big fair value gap. Let's mark it like 4-hour fair value gap, this one. So definitely, sooner or later, we're going to test it. Will we hold it or not? Only the time will show us. For me personally, more logical to see the drop down. Of course, now at September 13, I understand the crucial moment will be the 17th September, the rate cut, Fed decision. But for example, you can adjust the same model, the same framework for any time period in the market, based just by logic. So this is a zone to not open long. This is a zone, personally, for me, looks like the zone. Will we hold it or not? If we hold it before the news, most likely we can just consolidate in the sideline, like in the range. this one, and continue rally higher because the structure on a weekly and a monthly uptrend. If we not hold this fair value gap, we can see once again retest and rejection at a daily open. We can drop to the monthly and the weekly and order block. So you build a plan. And once again, no makes sense to open long here. Just my personal thoughts, just my personal experience, because there's nothing. We just flow in between the daily open and the top, monthly open and the low, and order block. That's why more logical, try to open here or even here. So that's a plan. Looks like not a big deal. And yeah, somebody can say, yeah, I like to trade with a DCA. I open here, here, here. But what if the price will drop a little bit lower with the weak candle? You just add more margin and you just get a liquidation. Or you need one more margin. So that's a problem, guys. So better use DCA when the price drop to at least your first trouble area, first zone of interest. Let's go to the 1 hour time frame. On 1 hour time frame, this 4 hour time frame still relevant because it's a higher time frame. What is under? Under is possible order block. You can identify this one like order block, but like you can see, it's not so important. That's why if we not hold the 4 hour time frame fair value gap, most likely we just crash it down and will not even stop it order block on a 1 hour time frame. If we go to the 30 minutes time frame, we can identify the 50% of the gap. Here, for example, the gap. Let's extend it right. Locally, on 30 minutes time frame would be good and will be logical, even if we will drop and pass without stops inside a fair value gap. It will be not a mistake. Try to open long. So yes, we're not talking only about better things. So here, this will be logical entry for long locally with a target. So 0.5 level by FIB of 50% of the fair value gap on 4 time frame will be like logical entry. Try to open long position with the target daily open. And tomorrow, this today current daily open will be the previous day open. So you understand, usually it's play like also the magnet for returns. So the market makers who open short now, right, they in profit. After that, here they open long. More people also open long, they mitigate position, and some time they will be in temporary losses. They close position and add margin to the short position. So this sounds like complicated. The trading, just personal for me, it's not like a magic. It's all about the logic. It's all about the logic of your actions. You take an action or not, you skip. It's also the action. So this is how I try to build every single day the logical chain of my actions. So yes, we go and continue going down. Why? Because on 30 minutes time frame, here's like a magnet, the gap on 30 minutes time frame. But it's not that important because anyway, under is more juicy gap like 4 hours time frame. But this is a potential long position. What to do, for example, if we will not drop to weekly open, monthly open? Everything pretty simple. For example, here you catch the great move. Here, pump like 1:2 ratio. You can close some part of your position, add your stop loss a little bit higher, almost at the break even, and just leave the position to the potential new all-time high or so. That's the point. So if we not go higher, you already fix the profit, for example, and get a stop loss. It's not a big deal. But at least it's a logical entry and logical stop loss. And after that, of course, when we build a plan, we go into the 15-minute time frame. And why we use the lower time frames? Because we want to make our stop loss better. So for example, we use the 4-hour time frame gap here. let's mark. This is a 4-hour time frame, so we remember it. We move to the 15-minute time frame. And on 15-minute time frame, we get another gap. I can identify, for example, one limit order here, or open by market. Second one, at, for example, the 50% of the 15-minute time frame gap, like this one, and reduce the position of my stop loss. So, for example, if I could open position here, the stop loss will be like 1.27. But if I will get like one limit order and the second one, so my entry will be here, so like 1% stop loss. If I will open position not so aggressive, I want to open position here at 230. Also, the small tip, almost never the market makers give you the option to open position at the clearly round number, right? So put like 230 and 45, something like this one. So this is a size of position reduce it. It's like 0.7%. It's much better. So we almost reduce position, the stop loss twice. We cut our stop loss, so we will lose less money. That's why we use the smaller time frame. Of course, after that, we go into the 5-minute time frame. On a 5-minute time frame, we can see this is a 15-minute time frame gap, and under we can see the zone of support also, and this zone of support. So you can mark that zones. And it's only up to you at what level open that position. That's why, guys, I highly recommend you, no rush, just open the Notion, open the, I don't know, some Excel list, or just a Word, or even in the paper. Just create the step-by-step plan, the workflow, how you personally analyze the charts. What are you trying to find? What do you try to identify on that chart? So, for example, also by end of this video, I would like to show on the small time frames. Yes, I use the trade on indicator because it's giving me the confidence. So soon we'll see the reversal move. Here was a sell, here's a take profit. So soon we see the consolidation, most likely, and a new signal to buy, like it was here. Sell, buy back, drop, take profit, buy, and reversal move up. The same story probably we will see in the next few days here. Of course, guys, nobody knows the future, so don't believe in all of these gurus and experts who will tell you this is a super secret strategy which make you the millionaire. Guys, it doesn't work like that one. So take off the pink glasses and look at more realistically without romantic on the charts. So guys, I hope you like this video, subscribe channel and share this video with your friend. See you next time, guys.